Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is Uncollectible Accounts Receivable. The Accounting Hub is a project that provides you free accounting classes as well as Excel, how to extract accounting information from databases. There are a lot of very interesting playlists. Check there and also subscribe to our channel. You will be the first one to know when a new video arrives. So, let's go. Allowance method for recording losses from uncollectible accounts. Accounts receivable that cannot be collected for any reason are called uncollectible accounts. First transaction, sales on credit. The second transaction should be collecting the money, but for some reason, we are not able to collect the money anymore. Our client is broken, our client is missing, our client doesn't want to pay it, so for any reason we are not able to collect the money. Some business refer to uncollectible account as bad debits. That is how we usually call it. Crediting the estimated value of uncollectible accounts to a contra account is called the allowance method of recording losses from uncollectible accounts. This is not valid for tax. They don't work with allowance, but for accounting, we work with allowance. So we estimate the amount that we will not be able to collect, usually based on previous numbers, and we credit it. Instead crediting it to accounts receivable, because that doesn't happen yet, we credit it to a contra account called allowance for uncollectible accounts. And what a contra account is the opposite account of the normal account. So accounts receivable, the normal balance is a debit. So a contra account, the normal balance will be a credit. If we are talking about equity, normal balance is credit. A contra account, for instance, accumulated loss, it is a debit. Okay? And the difference between an assets account balance and its related contra account balance is called the book value. Normal balance less, or normal account less contra account, it is the book value. And the difference between the balance of accounts receivable and its contra account allowance for uncollectible account is called the book value of accounts receivable. And the amount of accounts receivable a business expects to collect is called the net realizable value. And we also have the matching principle here. Allowance for uncollectible account is related with our net sales or our sales on credit. So it is a matching principle. Okay? And how do we estimate it? Two methods. Percentage of sales method. Assume that a percent of credit sale will become uncollectible. Or the percentage of accounts receivable method. That is the most common. Use an analysis of accounts receivable to estimate the amount that will be uncollectible. That is the most used one, by the way. And the most modern one, if we can say that, is the aging of accounts receivable. So analyzing accounts receivable according to when they are due is called the aging of accounts receivable. So this is our accounts receivable. Customers, our account balance. It's current, so it is not due yet. So this one, a little bit more than 50%, and we estimate that 1% of this number will not be collected. And then days account balance past due. From 1 to 30, this number, and we estimate that 4% will not be collected. 31 to 60, 61 to 90, over 90. And it's quite obvious here. The more days that we have past due, the higher is the percentage of uncollectible accounts. Over 90 days. Man, I am pretty sure that they will not pay us. So it is 80% chance that we will not be collecting, or we are estimating that we will not be able to collect 80% of this amount here. And here is how we do it. So we transfer these numbers to these columns here and so on. Okay, so this total to this 1% and uncollectible. So we compute the estimate for each age group, compute the total estimate, compute the addition to the allowance account. Let's check how it works better. We will do it on Excel. So guys, remember, all our Excel files, they are free, and the link to download it is in our video description. Let me just add a column here. Will be easier. So first of all, our accounts receivable as of December 31st. Oh. So it is a copy and paste of this first report here. So we have no math here, only given numbers. So okay, let's check based on our records. How much do we have on current? 1 to 30 days, 31 to 60 days, 61 to 90 days, and over 90 days. Okay, and guys, here, an Excel tip for you. 1 to 30. If we type 130, Excel will think that we are talking about January 30th. So what do we do? Single, let's delete it, single quote, 130. Then we are telling Excel it is a text instead of date. Nice tip here. So okay, let's delete everything here. So what do we have? Our beginning balance of allowance for uncollectible account is 125. Also a given number. So okay, this is our previous balance. So let's transpose this number from these rows to this column here. So equal, there is a way to transpose it based on formula, but doing equal is much faster. The formula is very useful for a large amount of numbers, not 5. And equal these ones. Percentage of uncollectible accounts. 1% for current, 4% for 1 to 30, 12% for 31 to 60, 30% for 61 to 90, and 80% for over 90. So here, the sum of our amounts, 20, yellow the same 20 here. So we're good to go. Uncollectible amount times the percentage. So 117, let's copy and paste this formula, paste, only formulas, we don't want to mess with our format. And now the total of uncollectible accounts, 2,509. However, this is not the expense. This is the ending balance of our account, of our allowance for uncollectible account. So if our beginning balance is 125, we need an additional, so ending balance less beginning balance of $2,384.11. We need to journalize it. How do we do that? So first of all, let's journalize this expense. So here we only use the general journal because we have no cash, no accounts receivable, no nothing. Okay, so we only have the ledger of the allowance for uncollectible accounts. So let's come it here. So first, it is an adjusting entry. Not entries because it's only one. Adjusting entry. Because this is an accrual entry. So adjusting entries. So debit, uncollectible accounts expense. And then how much? 2,384. And credit is the allowance for uncollectible accounts, our credit. And we move this one to the allowance for uncollectible account journal. So what do we have here? Beginning balance 125, December 31st. Our uncollectible accounts expense, we credit it, our credit 2,384, and our ending balance 2,509 must match with our ending balance here, 2,509. Perfect. However, now we are collecting the money, canceling the balance of a customer account because the customer does not pay. So, okay, that happens. The client is not paying us. We call it writing off an account. How does it work? Let's consider this one. January 25th, wrote off Edmund's Hospital past due account as uncollectible based on Memorandum 58. So, a journal here. Let's journalize it. So, what do we do? January 25th, we debit the allowance for uncollectible accounts. Because, okay, we don't need to record an expense. And this is the most common mistake, by the way. We don't record it as a new expense because our expense is based on an estimate number. Now, the actual number, we need to reduce our estimated numbers. And then, our debit is, so, based on Memorandum 58, our debit 639, and now we credit accounts receivable. So we are crediting accounts receivable now. Let's delete it. Equal the 639. So okay, we need to journalize this one on the journal. So here, the first one, our customer, Edmund Hospital. So Edmund's Hospital, we are crediting the 639 here. So okay, let's assume that we have a beginning balance of 20,000 from this one. Or, sorry, our beginning balance is not Edmund's Hospital. Our beginning balance is the 639. So, small mistake here. Oh no, it's right. Sorry, guys. So, Edmund's Hospital, balance, beginning balance 639. We are writing this off. So, written off the credit of accounts receivable 639. And what about accounts receivable? Our beginning balance. Let's work on blue here. 2381. The same 2381 here in yellow. And now we are Writing off the Edmonds Hospital, $639. Okay? And allowance. We are also debiting Edmonds Hospital $639 because we are reducing our allowance here. So now the ending balance of our allowance is $1,869. On cash, nothing happens so far. However, let's assume that we were trying to collect this money and we are tough. We are still trying to collect. And on March 9th, received cash in full payment of Edmonds Hospital's accounts. Previously written off as uncollectible. So, whoa, we are collecting this money again. So we need two journal entries. The first one is to reverse this one here. So let's reverse it. How do we reverse it? Debit accounts payable, credit, allowance for uncollectible accounts. Based on memorandum 71 now. Debit $639. Credit $639. And then let's reverse it. The credit is, so let's reverse it. Memorandum 71. And then debit the same $639. Credit the $639. Now, okay, we are reversing it. So let's reverse it. Reopen account for Edmonds Hospital. We are written off and now we are reopening. We are collecting this money. So, okay. A debit $639, accounts receivable. On accounts receivable, we are moving back this guy here to $639. And the allowance, we are moving this allowance back. So Edmonds Hospital, we are moving the allowance back. And now the ending balance will be the same again. Okay, because we have written off, but we have reopened as well. And here, nothing so far on cash. But we received it in cash. So we need to do it as well. Let me just make it pretty again. Yes. So now the second journal entry based on receipt number 695. So let's collect this money. Debit cash, credit, accounts receivable. 639, 639. So okay, let's go to our journals. Edmonds Hospital. We are receiving it based on cash receipts number 18. That is, we don't have it here, but let's consider this cash receipt 18. 639, so we are crediting accounts receivable. So the ending balance will be nothing. Accounts receivable, we are collecting the money from Edmonds Hospital, 639. So our ending balance is 19,741. On allowance, nothing is done, nothing related to allowance anymore. And our cash, so our cash here, March 9th, cash, Edmonds Hospital, Receipt 695. Receipt 695. How are we collecting the money? On accounts receivable. So we are crediting accounts receivable and we are debiting cash. So our cash debit. Where are you? Here. Cash debit here. Okay, guys. I know that is not so easy, but also not that hard. Let me just format it pretty. Okay. So, guys, watch this video how many times you want. Let me go back down here. Now I'm pretty again. And questions or comments, leave it here or email me at jscarping@gmail.com. Thank you so much for watching this video. Have a very nice day and God bless you.